the powers that be all over the world understand that if they want to implement their policies, their way of life, the U.S. can no longer be an impediment. And how do you do that? You collapse the U.S. It's obviously a plan to torpedo the United States because the policies that they were putting in place all along have been too stupid to not be the...
You're watching Silver News Daily. Subscribe for more. Did you know that economic tensions are pushing silver to become the ultimate safe haven for your wealth? Bill Holter, a renowned financial expert, believes that now more than ever, silver is the investment to watch. In this video, we'll uncover why Holter is so bullish on commodities and how silver could be your best bet in these turbulent times. Stay tuned to discover the hidden potential of silver and why it might just be the key to protecting your wealth. Trust me, you won't want to miss this.
Prices are $30, $40 higher on gold and $3 to $4 higher on silver. You're already seeing the cash markets, the jaws are starting to open between the cash markets and the paper markets. And what's happening is you're having buying on LBMA, buying on COMEX, getting metal delivered out, and it's being shipped to Shanghai. It's an arbitrage. So I think you're already seeing that, and going one step further, and this is the big step. There's questioning now of the amount of gold held by China. I think they say they own like 2,700 tons or 2,900 tons or something like that. And I'm going to say it was like 5 or 6 years ago, on the back of a napkin between what had been, first off, remember that almost nothing gets exported. There's no gold that gets exported from China. They have production of roughly 400 tons per year. And if you look at the Shanghai imports, I mean, those have been, sky high, 1,000, 2,000 tons per year. So even if you look at just the 400 tons per year that is produced within China, I mean, over 10 years, that's 4,000 tons. And they've been doing this now since, there's been a concerted effort to produce gold in China since the early 2000s. So, is it 6,000, 8,000? I mean, on the back of it, I could have shown you where China had 25,000 tons already. So, I mean, they're probably 30, 35, 40,000 tons at this point. Once the BRICS currency does get released, and they have said that gold is going to be one of the components that backs the currency. Now, one of the questions is how much, how big of a percentage? Is it 20%? Is it 40%? I don't think it'll be more than 40%. But then you got to do the math, because if the BRICS currency is what settles trade worldwide, there's got to be a lot of currency. And that means there's got to be either a lot of gold, or the price of gold has got to be a lot higher for the gold that's actually backing the currency. So long story short, I do think that for their own benefit, if you're sitting on 30, 40,000 tons of gold, wouldn't you want to revalue that higher at some point? So yeah, I think absolutely China is in their best interest going to revalue gold higher. And one of the things that does is it makes it really hard for anyone to catch up to their hoard, because it's so costly to purchase each ounce. So, I mean, if they revalued it to pick a number, 10,000, 20,000, 50,000, whatever, it would make it really difficult for nations that didn't have gold but want gold.
The global economy is currently facing unprecedented challenges, with economic tensions rising from multiple fronts. Central banks worldwide are engaging in excessive money printing, leading to fears of hyperinflation and currency devaluation. Bill Holter, a prominent figure in the precious metals market, often criticizes these central bank policies, likening them to a Ponzi scheme that's bound to collapse. Holter points out that the vast majority of U.S. dollars in circulation were printed in just the last few years. This excessive money printing has created an inflationary environment, eroding the value of fiat currencies and increasing economic instability. As trust in traditional financial systems wanes, investors are seeking refuge in tangible assets like silver and gold. In his discussions, Holter emphasizes the unsustainable debt levels and the looming crisis in the financial system. He argues that the current economic policies are not just flawed, but are leading us towards an inevitable collapse. This scenario is causing savvy investors to look for safer, more stable investment options, with silver emerging as a prime candidate. Holter's insights are not merely speculative. They are grounded in his extensive background in finance and his collaborations with other experts like Jim Sinclair. He consistently ties the dynamics of the precious metals market to broader economic trends, providing a comprehensive analysis that highlights the increasing risks within the global financial system. The combination of reckless fiscal policies, mounting debt, and the erosion of currency value sets the stage for a significant economic upheaval. And in such times, Holter believes that commodities, especially silver, offer a more secure and attractive investment option to protect and preserve wealth.
I don't think silver will become illegal. And I certainly don't think that pre-1933 gold, because those are collectibles, they're legally considered collectibles. I don't think those would be confiscated. But what that'll do, if they do make it illegal, it turns it into a black market. And what happens to the value of something once it trades in the black market? It goes to the moon, simply because when you tell a human that they can't have something, they want it even more. So, they can do that, but then they're basically revaluing gold versus the dollar versus every currency on the planet. That would be a way. Spot gold was roughly $1,000 an ounce. And there was a pretty big fear nationwide that Obama was going to go through with a gold confiscation. And remember, gold at the time was about $1,000 an ounce. And you were able, if you had them, you were able to liquidate MS-63 Liberties. That's just, one of various grades, but an MS-63 Liberty was bid by dealers. They would pay you a clear $1,800 for the coin. And that's because there was fear of confiscation. So, and of course, at that point, the best thing to do would have been to swap that out into Eagles, and you ended up with what, 30, 40, 50% more Eagles, more ounces, so to speak. So, I mean, that's just an example right there where if you tell humans that they're not going to be able to have something, they will immediately shift gears, change direction. And that's what they did. I mean, the pre-1933 gold got pushed to the moon. And interestingly, right now, an MS-63 Liberty, you're probably talking, 5% higher than an Eagle. So, I mean, my question is, if you're going to buy Eagles, why not step up? Why not go the next step? Everybody has in their mind, I don't want to do numismatics because I'm getting ripped off. Well,
Bill Holter considers silver to be one of the most undervalued assets in today's market. Despite its critical industrial applications and historical role as a monetary metal, silver's current market price does not reflect its true value. Holter points out that silver is not just a commodity, but a strategic asset, essential in various industries, including electronics, solar energy, and medical applications. In an interview with Walls from Mainst, Holter emphasized that the price of silver is artificially suppressed due to large short positions held by major financial institutions. These institutions manipulate the market to keep silver prices low, allowing them to profit from the disparity between the physical demand and the paper market. Holter argues that this manipulation has created a significant disconnect between silver's real value and its market price. He believes that the physical demand for silver, which continues to grow, coupled with a dwindling supply, will eventually force a price correction. This correction could be dramatic, as the market readjusts to reflect silver's true worth. The industrial demand for silver is another crucial factor that supports Holter's bullish outlook. Silver is indispensable in the production of electronics, solar panels, and other technologies that are integral to modern life. As industries expand and technological advancements continue, the demand for silver is expected to rise, further straining the already tight supply. Moreover, silver has a long history as a monetary metal, often used as a hedge against economic instability and inflation. Its dual role as both an industrial and monetary asset makes it uniquely positioned to benefit from the current economic climate. Investors are increasingly recognizing this, and as they turn to silver for stability, the market is poised for a significant upward shift. Holter's assessment underscores a fundamental principle. The market cannot suppress the true value of silver indefinitely. When the inevitable market correction occurs, those who have invested in silver will likely see substantial returns. This makes now a particularly opportune time to consider silver as a key component of a diversified investment portfolio.
Oh yeah, let me clarify that because Andy's been running around saying that my quote is too stupid to be stupid. It's not actually my quote. My quote is, it's too stupid to not be the plan. That's what I originally said back in 2007. It's a plan. There's no question in my mind that it is a plan, and the powers that be all over the world understand that if they want to implement their policies, their way of life, they have to. The U.S. can no longer be an impediment. And how do you do that? You collapse the U.S. So, I mean, everything that's being done and everything that's been done, and I started, like I said, in 2007 writing that it's obviously a plan to torpedo the United States because the policies that they were putting in place all along have been too stupid.
Market manipulation plays a significant role in the current pricing of silver, and Bill Holter is one of the vocal critics highlighting this issue. He explains that major financial institutions hold large short positions in silver, artificially keeping the prices low to benefit their own interests. This manipulation creates a false market scenario where the true value of silver is not reflected in its trading price. In interviews and articles, Holter delves into the mechanisms of this manipulation. He describes how these institutions use paper contracts to flood the market, increasing the supply artificially and driving down prices. This tactic not only suppresses silver's price, but also creates a misleading narrative about its demand and value. Holter emphasizes that this artificial suppression cannot last forever, as the fundamentals of supply and demand will ultimately prevail. Holter points to the disparity between the paper and physical silver markets. While paper contracts can be created endlessly, the physical supply of silver is limited and increasingly strained. As investors demand delivery of physical silver, the pressure on these institutions grows, exposing the fragility of their short positions. This tension between paper and physical markets sets the stage for a potential explosive correction in silver prices. Moreover, Holter highlights historical instances of market manipulation in precious metals, drawing parallels to the current situation. He cites the efforts by regulatory bodies to address these manipulations, albeit often delayed and inadequate. However, the growing awareness and scrutiny of these practices are gradually pushing the market towards transparency and fair value. The consequences of this manipulation are far-reaching. It not only affects the prices but also undermines investor confidence in the market. Holter argues that as more investors become aware of these manipulative tactics, they will increasingly demand physical silver, further tightening the supply and driving prices up. This shift from paper to physical silver investments could trigger a significant market correction, aligning prices with the true value of silver. In summary, Bill Holter's insights into market manipulation reveal a critical aspect of the silver market. He urges investors to recognize the artificial suppression and consider the long-term potential of silver. As the market moves towards correcting these imbalances, those positioned with physical silver are likely to reap substantial benefits. This understanding is crucial for anyone looking to navigate the complexities of the silver market and capitalize on its undervalued potential.
Areas where things don't reverberate through the markets. I mean, there's all kinds of news that's come out where markets are really, not affected. If you go back to, I would have thought that there would have been a bigger move than we've already had in gold and silver. And a move down, certainly a move down versus other fiat currencies in the dollar after, I guess it was October, November of last year when they said that they were going to sequester the 300 billion of Russian reserves. And I would have thought 2 weeks ago that when they first started talking about using 50 billion of the Russian reserves as collateral for a Ukrainian loan, I would have thought that you would have seen much more market movement, and I would have thought that you would have seen on the USDX a drop.
Bill Holter's bullish stance on silver is significantly influenced by the stark contrast between its growing physical demand and the tightening supply. This imbalance, he argues, is a crucial factor that could lead to a dramatic rise in silver prices. The demand for silver spans various sectors, with industrial applications being one of the most significant. Silver is indispensable in the production of electronics, solar panels, and medical devices due to its excellent conductivity and antimicrobial properties. As technology advances and industries expand, the demand for silver in these applications continues to grow. For instance, the push for green energy solutions has led to an increased demand for silver in solar panel manufacturing, a trend that shows no signs of slowing down. On the supply side, silver production is facing several constraints. Mining output has not kept pace with the rising demand. Many of the world's silver mines are aging, and new discoveries are becoming increasingly rare. Additionally, environmental regulations and political challenges in major silver-producing countries further limit the supply. These factors contribute to a growing supply-demand gap that cannot be ignored. Holter highlights that the silver market is experiencing a significant drain on physical inventories. Investors and industries alike are competing for a limited supply of physical silver, which is becoming increasingly difficult to source. This scenario is exacerbated by the ongoing manipulation of silver prices through paper contracts as previously discussed. The result is an artificially low price that does not reflect the true scarcity of the metal. The impact of this supply constraint is already visible in the premiums being paid for physical silver. Investors are willing to pay above the spot price to secure tangible silver assets, indicating a strong belief in the metal's future value. This willingness to pay premiums underscores the growing awareness of silver's intrinsic worth and the inadequacy of its current market price. Holter argues that the physical demand for silver will continue to rise, driven by both industrial needs and investor demand for a safe haven asset. As the supply constraints become more pronounced, the pressure on silver prices will increase. Eventually, the market will be forced to correct, aligning prices with the true value dictated by supply and demand fundamentals. In conclusion, the imbalance between the physical demand for silver and its constrained supply sets the stage for a significant price correction. Bill Holter's analysis points to a future where silver's true value is recognized, making it a compelling investment for those looking to protect and grow their wealth amidst economic uncertainty.
If there is a confiscation of gold, it won't be impossible, but it'll be very difficult to confiscate eagles because eagles do not circulate as currency. They don't circulate as coin. Essentially, you are buying them from the U.S. Mint. The U.S. Mint produces the gold eagles, and when they get paid, they're making a profit. So can they really sell you an eagle today and then next week come back and say, but you have to sell them back to us? There'd be lawsuits forever and ever on that. Now, could they say gold is illegal? You got to turn your bars in. You got to turn your generic coins in. You got to turn your maple leafs in, your Krugerrands, et cetera, et cetera. Yeah, that could be done with a stroke of a pen. And there's really, because the Supreme Court never even really ruled on it back in 1933, that could be done easily. But taking eagles, that would be very difficult. Going one step further on that person's question, if you're stacking silver and you understand the reason that you want to be heavier in silver, much, much heavier in silver now, is because of the ratio. At 80 to 1, man's ratio is 80 to 1. It takes 80 ounces of silver to buy 1 ounce of gold. Comes out of the ground at 10 to 1. Man discounted it to 16 to 1 for hundreds of years simply because of the transport costs and logistics. So silver was discounted from the natural ratio of 10 to 1. But 80 to 1 is stupid. If it comes down to 40 to 1, what that means basically is that it has outperformed gold 2 to 1. So if you think that gold, and you think rightly that gold is going to hold its purchasing power for you.
Bill Holter's analysis extends beyond just the supply and demand of silver. He places it within the broader context of a global shift towards tangible assets. In an increasingly unstable economic environment, investors are looking for safe havens to protect their wealth. Silver and gold, with their intrinsic value and historical reliability, are becoming the go-to options. Holter often discusses how central banks' policies, particularly the excessive printing of money, are eroding trust in fiat currencies. This loss of confidence is pushing both institutional and individual investors to seek alternatives that are not susceptible to inflation and devaluation. Precious metals, especially silver, are perceived as a hedge against these risks. The global financial system, according to Holter, resembles a Ponzi scheme, where new money is constantly needed to pay off old debt. This unsustainable model is bound to collapse, he argues, leading to a rush towards tangible assets. Silver, with its dual role as an industrial commodity and a monetary asset, stands out as a particularly attractive investment. Holter points out that in times of economic crisis, there is a historical precedent for a flight to safety in precious metals. During the 2008 financial crisis, for example, both silver and gold saw significant increases in demand as investors sought to protect their assets from the volatility of the stock market. He believes a similar pattern will emerge as the current economic tensions continue to escalate. Another factor contributing to the shift towards tangible assets is the geopolitical landscape. Trade wars, political instability, and global conflicts add layers of uncertainty to the financial markets. Investors, wary of these risks, are increasingly looking to silver and gold as stable stores of value that are less affected by geopolitical turmoil. Furthermore, Holter highlights that the current generation of investors is more informed and connected than ever before. With access to a wealth of information and analysis, they are more likely to question traditional financial advice and seek out alternative investment strategies. This informed investor base is more inclined to appreciate the value of tangible assets, further driving demand for silver. In summary, the global economic and geopolitical instability is creating a perfect storm for a shift towards tangible assets like silver. Bill Holter's insights suggest that as trust in fiat currencies and traditional financial systems continues to erode, silver will increasingly be seen as a safe haven. This shift is not just a short-term reaction, but a long-term trend that could redefine investment strategies for years to come.
It absolutely matters. An 80-to-1 silver to gold ratio, what that's saying is that silver is grossly undervalued to gold. So silver is a steal. And if I said if, I should have said when, because ultimately the paper markets are going to break, and gold and silver and other commodities are not going to be controlled by paper markets. They're going to be controlled by cash markets. So yeah, that ratio will come down. Where it comes down to, I don't know. Does it come down to 40-to-1 and that's it? Does it come down to 30? Does it come down to 20? You've got some people out there like Big Swear talking about silver is going to go 1-to-1. Silver is going to be more valuable than gold. And I don't see that in any possibility, in any way, shape, or form. There's no way that's going to happen. But I do know where things are right now. Silver is grossly undervalued to gold. I really think that state legal tender laws matter at this point, but it's a good start. It's a move in the right direction. As far as storage is concerned, in my opinion, the best state to store in is North Dakota because it's the only state in the country that is not part of the Federal Reserve System. They have their own state banking system. So you could never have a federal agent walk in and say, tell us who your customers are and what you're storing. Even though it's a vault, and it's a non-bank vault, federal agents don't have any right to set foot in.
Bill Holter's bullish stance on silver is rooted in the potential for its price to skyrocket under the right economic conditions. While he may not have explicitly predicted silver reaching $1,000, his analysis points to significant upside potential due to several converging factors. One of the primary drivers behind this potential is the unsustainable debt levels in the global economy. Holter frequently discusses how the excessive borrowing and money printing by governments and central banks have created a precarious financial situation. As this debt becomes unmanageable, traditional currencies are likely to face severe devaluation, pushing investors towards assets that can preserve value. Silver, with its historical role as a hedge against economic instability, stands to benefit immensely from this shift. Holter also emphasizes the role of inflation in driving silver prices higher. With the vast amount of new money entering the economy, inflation is a looming threat that could erode the purchasing power of fiat currencies. Silver, being a tangible asset, tends to perform well in inflationary environments as it retains its value, while paper money loses its worth. This makes silver an attractive option for investors looking to protect their wealth from the ravages of inflation. Moreover, Holter points out that during periods of economic turmoil, precious metals often see exponential price increases. Historical precedents show that in times of crisis, when trust in financial systems wanes, the demand for silver and gold surges, leading to dramatic price rises. The combination of industrial demand, monetary instability, and supply constraints creates a perfect storm for silver prices to potentially reach unprecedented levels. Additionally, Holter's analysis suggests that market manipulation can only suppress silver prices for so long. As the physical demand for silver continues to grow and supply remains tight, the pressure on the market manipulators will increase. Eventually, the market will correct itself, potentially resulting in a sudden and significant increase in silver prices, as they align with the true value dictated by supply and demand. Holter also considers the speculative nature of the market, where investor psychology plays a crucial role. As more investors become aware of silver's potential and its role as a safe haven, the demand could spike, driving prices even higher. This speculative buying, combined with the fundamental factors of supply and demand, sets the stage for a potential silver price explosion. In conclusion, while predicting exact price targets like $1,000 might be speculative, Bill Holter's analysis clearly outlines the conditions under which silver could see substantial price increases. The combination of economic instability, inflation, supply constraints, and market correction all point towards a bullish future for silver. For investors looking to hedge against these risks, silver represents a compelling opportunity with significant upside potential.
Go back, read The Great Taking, understand that these laws are actually in place. This is not speculation. The laws have been put in place all over the world. And when these institutions go down, you don't actually, it's not a deposit at the bank. The stocks in a broker are not actually yours. They're on the bank's balance sheet, and they will bail your capital in to try to save themselves, or how exactly this scam works. So you go to your broker and you deposit $100,000, $1 million, $10 million, whatever, and you do a bunch of trades, and every trade costs you $7.95. Do you really believe that a business model that charges customers to trade $1 million worth of stock and the commission is $7.95 is actually a business model? I mean, these companies have huge skyscrapers. They got private jets. The upper echelon drive around in Lamborghinis. How do they do that? On $7.95 per trade. It's an impossibility. The way they do that is you bring your $1 million in, you buy a bunch of stocks, and before the end of the day, those stocks are already lent out. That's how they make their money. They lend them out to short sellers. They lend them out to be used as collateral. And if they're lent out, are they yours? I mean, can you understand that concept that if your shares are lent and someone else has control of those, and all of a sudden the music stops, are those shares yours? Are they the brokers, or are they who the shares got lent to?
Bill Holter's predictions about silver are deeply rooted in historical patterns and precedents. By examining past economic crises and their impacts on precious metals, Holter provides a compelling case for the future potential of silver. Historically, during times of economic turmoil, silver and gold have always been seen as safe havens. For instance, during the 1970s inflation crisis, silver prices soared as investors fled from devaluing currencies. Holter draws parallels between that period and the current economic environment, suggesting that we might be on the verge of a similar surge in silver prices. Holter also references the 2008 financial crisis, during which both silver and gold experienced significant price increases. As the stock market crashed and traditional investments lost value, precious metals became the go-to assets for preserving wealth. Holter argues that the current economic instability, marked by excessive money printing and mounting debt, is even more severe than what we witnessed in 2008, indicating an even greater potential for silver to rise. In addition, Holter discusses how government actions and policies have historically influenced the price of silver. For example, in response to economic crises, governments have often turned to measures like quantitative easing, which can lead to inflation and currency devaluation. These actions typically drive investors towards precious metals as a hedge. Holter believes that the current wave of government interventions is setting the stage for a significant appreciation in silver's value. Another historical factor that Holter highlights is the role of silver as a monetary metal. For centuries, silver was used as a form of currency and a store of value. Even though it is no longer in widespread use as money, its historical significance continues to influence its perceived value. Holter argues that in times of economic uncertainty, this historical context makes silver an attractive option for investors looking to safeguard their assets. Moreover, Holter points out that during previous economic downturns, the disparity between the physical and paper silver markets has often led to significant price corrections. As investors demanded physical delivery of silver, the market had to adjust, resulting in sharp price increases. He believes that a similar scenario is likely to unfold in the near future, as the current market manipulation becomes unsustainable. Holter's historical insights provide a comprehensive framework for understanding the potential future movements of silver prices. By examining past patterns and drawing parallels to the present, he offers a compelling argument for why silver could experience substantial gains. For investors, these historical precedents serve as a valuable guide, highlighting the importance of including silver in a diversified investment portfolio to protect against economic instability.
As far as the metals are concerned, they broke out. I put an article out on May 11th. Not an article, basically. I put it up on my website. I showed some charts and said that it is likely that gold would go to new highs, silver would break over $30. And that did happen. We got up to about $32.50 on silver. We got to $24.50 on gold. They were both severely overbought, and were overbought for a fair amount of time. So those gains were naturally going to be digested. And of course, you got the powers that be that don't want higher gold, don't want higher silver prices because they're direct competition to fiat. I think it was last Friday. There was basically the amount of silver that's mined in a year's time that was equal to the amount of trading that was done on COMEX on Friday. So I mean, they smashed this with paper again. I did put an article up, I believe it was Sunday or Monday, with the same charts. We're definitely no longer overbought. We're closer to oversold than overbought. Silver, well, first we'll start with gold. Gold has pulled back to this 2280, 2300 level. So we've had a pullback there. Silver has pulled back. I think it got down as low as 2875, 2880, something like that. And on the chart that I showed, there's definitely support at the 2850, 29 level. And there's a moving average that's right here at 29. And if you look at what I talked about in the first article, the MACD, the moving average convergence divergence, has declined, and at this point, fairly close to forming another hook to turning to the upside. So silver pulling back to 29 is absolutely where you should have thought that it would pull back. I mean, nothing goes straight up. Nothing will go straight up until we have a revaluation. Then it'll be like a light switch, and poof, you'll have new prices that are totally unrecognizable. On this move, on the next move higher, and I think the next move higher, you could see it beginning immediately. I think we're in the bottoming. We're digging on that $29 level as we speak. I think this is going to bring us probably to the 34 to 37 level. We'll be overbought, and you'll see another pullback. And then I believe that 3250, the previous high, or 32 range, will again be the support. So this is it's totally natural. Anybody who was disappointed that gold or silver didn't keep going, once it hit 32, 32.50, you don't understand how markets, normal markets work. And these are not normal markets.
Bill Holter strongly advocates for the role of silver in protecting wealth, especially in uncertain economic times. He emphasizes that silver is not just an industrial metal, but also a critical asset for wealth preservation. Holter explains that one of the primary reasons to invest in silver is its ability to act as a hedge against inflation. Unlike fiat currencies, which can be printed at will by governments, silver is a finite resource. This scarcity, combined with its intrinsic value, makes silver a reliable store of wealth. As inflation erodes the purchasing power of paper money, silver maintains its value, protecting investors from financial loss. Additionally, Holter points out that silver has a unique advantage due to its dual role as both a commodity and a monetary metal. Its industrial applications ensure steady demand, while its historical use as currency enhances its appeal as a safe haven. This dual nature provides a level of security that is not found in many other assets, making silver a crucial component of a diversified investment strategy. Holter frequently discusses how the manipulation of silver prices by major financial institutions has created an opportunity for savvy investors. The current suppressed prices do not reflect the true value of silver. As awareness of this manipulation grows, more investors are likely to seek physical silver, driving up demand and prices. Investing in silver now allows investors to capitalize on this future correction. Moreover, Holter highlights the increasing physical demand for silver in both industrial applications and investment portfolios. The push for green energy solutions, such as solar panels, is boosting industrial demand for silver. Simultaneously, economic uncertainty is driving more investors towards silver as a safe haven. This growing demand, coupled with limited supply, sets the stage for a significant increase in silver prices. Holter also addresses the importance of physical silver over paper silver. He warns that paper silver, such as ETFs and futures contracts, may not provide the same level of security as owning physical silver. In times of economic crisis, the value of paper silver could plummet, while physical silver retains its value. Holter advises investors to prioritize physical silver to ensure their wealth is truly protected. Finally, Holter underscores that silver's historical performance during economic crises makes it a prudent choice for wealth protection. During periods of economic instability, silver has consistently outperformed many other assets, providing a reliable hedge against market volatility. By including silver in their portfolios, investors can safeguard their wealth and mitigate risks associated with economic downturns. In conclusion, Bill Holter's insights highlight the crucial role of silver in protecting wealth. Its ability to hedge against inflation, combined with its industrial demand and historical significance, makes silver a compelling investment. As economic tensions rise, investing in silver offers a way to preserve wealth and potentially achieve significant returns.
In the first go around, yeah, you're probably going to see 5 or 10 big banks that are supported by the Treasury, and they're probably going to make it. And that's their goal. Their goal is to foist the CBDC, central bank digital currency, on us so that they can watch, see, and even control everything that we do financially. They can see if you buy a stick of bubble gum. They can watch this interview and shut your account and shut my account off. So yeah, they are definitely going to try to save the big banks, and it makes sense from the standpoint of if they're going to come out with a central bank digital currency, is it easier to do it with 10,000 different banks or 10 different banks? With 10 different banks, it's way easier to coordinate, and they can use cover of, well, the system collapsed, but we still have these banks. Your money's safe. Blah blah blah. It'll be for the next 6 months to a year. Even if your bank doesn't fail, you're going to be left with dollars that are going to be devalued in a drastic manner. But my thought process is the banks as a whole are going to collapse. There's not going to be anything standing. I guess the best way to say it is, okay, so they don't invest in real estate, but there's been a global run out of U.S. Treasuries. Your bank definitely holds U.S. Treasuries. So, now they've had their their balance sheet devalued. Is your bank going to survive if the Treasury doesn't?
Bill Holter's analysis culminates in a powerful argument for why silver is the ultimate investment in today's tumultuous economic landscape. As we discussed, the combination of increasing economic tensions, market manipulation, physical demand, and supply constraints sets the stage for a significant price correction in silver. But what does this mean for you as an investor? Holter believes that the current economic policies are unsustainable and will lead to a collapse of the financial system as we know it. Central banks' excessive money printing, mounting global debt, and the erosion of fiat currency's value create a precarious situation. In this scenario, silver and other precious metals emerge as safe havens, providing stability and protection for your wealth. The potential for silver prices to skyrocket is not merely speculative, but grounded in historical precedents and current market dynamics. The imbalance between supply and demand, exacerbated by market manipulation, cannot last indefinitely. When the market corrects, those holding physical silver will likely see substantial gains. Holter's insights reveal that silver's value goes beyond its market price. It is a strategic asset that can hedge against inflation, economic instability, and currency devaluation. As the global economy faces unprecedented challenges, the shift towards tangible assets is becoming more pronounced. Investors are increasingly seeking the security that silver provides, making it a crucial component of a diversified investment strategy. In conclusion, Bill Holter's bullish stance on silver is backed by sound logic and a deep understanding of the market. The combination of economic instability, rising inflation, supply constraints, and historical performance makes silver a compelling investment option. By investing in silver now, you position yourself to protect your wealth and capitalize on the significant upside potential as the market corrects itself. So whether you are an experienced investor or just starting, consider the insights shared by Bill Holter. Silver offers a unique opportunity to safeguard your assets and achieve significant returns in these uncertain times. Don't wait until it's too late. Act now to secure your financial future. Remember to subscribe to our channel for more expert insights and financial strategies. Stay informed and stay ahead in these challenging times. And please note, this is not financial or investment advice, but an analysis based on current market conditions and historical trends.
Hey, Dunnigan, I'm going to go off topic here just a little bit because I've gotten a bunch of emails in the last 30 to 60 days, people talking about the Iraqi dinar and the Vietnamese dong. They're going to be revalued and the white hats are in charge. And, Trump is still in control of the military. I just want to point out, in my opinion, that's all bullshit. I mean, that is all pie in the sky. It's hope. It's hopium. If Trump was still head of the military, we wouldn't have had 10 million illegals or more cross the border. And as far as these revaluations people are talking about, do you really think that Iraq or Vietnam or any country is going to actually make a bunch of speculators wealthy at their expense? I mean, that's it's non-logic. So I just wanted to throw that in there because I've gotten a bunch of those questions, comments. I've had people, be very disrespectful, telling me I'm